Everybody's trying to find a bottom when a move lower, like in today's action, happened. So you break a whole bunch. A lot of people miss the short in the market. That's why it goes down, because most people didn't capitalize on it. And so you get people who want to get short and they're going to be late. And then you get people that have been picking the bottom all the way down and they've gotten run over. So in order to have a bottom, you actually need less people able to stay long. And then you want to get some late shorts that we call short in the hole. The people who were pissed that they missed a 25, 30 point break, and now they're going to sell it and they're going to wear it. And so I just want you to watch. The market comes down in here. It gets a nice sell imbalance triangle, but buyers come in and get above it. When this happens, you scratch your head because they didn't breach it in here or in here, but in here, they chase it down to there, they could be done. The sell imbalance could be going away. The buyers could be taking over. But here's what's even more important in this sequence. We have a green line and a gray line, AKA lasers. It's bullish when it's green-gray. I'm sorry, it's bearish when it's green-gray. It goes bearish to bullish when it goes red-white. Now we get another sell imbalance, right? So now you're watching it. You still got more longs than shorts. You're still at or below this pink triangle. Remember, you're anticipating a bottom, whether it's to cover a short, to stay from getting short, or getting long. And you see what just happened. I got to back it up. Green goes to red, gray goes to white. Where? Right? There. Showing you now there's more shorts than longs and more aggressive buyers than sellers. Didn't go white yet, but there it goes. All this, and then it's starting to breach the second triangle. Probabilities, market rallies. Probabilities, all we're looking for are probabilities with tools that actually define what moves price. They influence what moves price. You have to use tools that directly influence why price moves in the first place, or else you're chasing your tail, going down rabbit holes, and following irrelevant tools that are just going to be random. How many people are short versus how many people are long? And that's the red or green laser. And then where are the aggressive buyers and sellers? How are they matched up against each other? Aggressive buyers are people that are moving their bids up, and offers are being moved up as well. So they're passive on the sell side, but aggressive on the buy side. That's what goes in to the laser going white. We call it the chaser. You see a profile over here of it, but we do the math to make it easier as a shortcut to see it white. Red white is bullish because more shorts than longs mean there are more buyers than sellers, and more aggressive buyers than more aggressive sellers means they're more aggressive buyers. Both indicative in what is needed for the price of anything to go up in the world, whether it's the S&P mini futures, crude oil, gold, Bitcoin, a t-shirt, shoes, a plane ticket, a car, a house, or the NASDAQ futures. You need more buyers than sellers. And when you are trying to predict price, you have to predict buyers and sellers. Don't forget that. If you see buyers and sellers doing business, you're not predicting anything. You see it. You can't say, oh, I predict a big buyer was going to come in and get filled. Well, you didn't predict it. You're just telling me it happened. Predicting is telling me something before it happens and then having tools that set probabilities. So when there are more shorts than longs, what you're saying is there are going to be more buyers coming into this market than sellers. And again, that's what that's the dynamic price needs to go up. No matter what that price is attached to, it needs more people willing to buy than people willing to sell. That's what our triangles tell us. That's what the ability to compare and contrast other people's positions is, to predict that buyers must be coming in, therefore you're justified to be bullish and or long.